All right, let's jump into it. Where we are, 10:35 on 17th of June. So look, it was pretty quiet on the news front or data front, and that it wasn't quiet on the news front, but quiet on the data front overnight. Really, only sort of thing of note was the Empire State Manufacturing, which missed massively to the downside, which is just yet another strike for US dollar in that sort of side of things, in terms of sort of having some sort of stronger US like local data to sort of support the idea that they might sort of like not need to cut so drastically. Look, we've got the FOMC coming up this week, and I don't think they are going to cut. But again, the main thing is sort of like what camp do these bits of data fall into? Because they're all little pieces of the puzzle that we sort of plug in to get an overall picture, an idea of what the Fed or whatever central bank might be doing. And of course, with weak economic data, particularly stuff like this, where manufacturing's like, it was expected to be down, but it was expected to be a sort of up from its negative. So negative 9.2, at least not as bad, up to 5%. But not only that, it went quite strong and drastic in the other direction. Like, this isn't a massive, massive bit of data, but again, it's one of those ones that you plug in, and it can have sort of further sort of implications and sort of meaning basically the health of the economy with these kind of bits and pieces. So, it's not necessarily the one that's going to be sort of like, oh my God, wow, it changed the landscape for weeks, but certainly it did have a little bit of reaction and sent DXY right down into major, major main supports. Which I'll get to the chart in a moment, because it held exactly where it needed to. Then we had some news out. Of course, everything's about the Middle East and that at the moment, and Iran and uh, Israel sort of like trading blows and that. But we had the in on the headline front, um, Iran issue a statement, I guess you'd sort of say, saying that they would like to sort of basically come to the negotiating table, and they give sort of favorable terms in regards to the nuclear deal. Uh, Obviously, sort of with the US involved, US is kind of like the sort of playing the mediator with all this kind of sort of stuff. But this Netanyahu, or whatever his name is, just seems to be, look, honestly, I'm not going to get into the whole thing, but in short, he just seems like a bit of a warmonger, honestly, because, all these sort of people go like, oh, okay, because the initial the initial supposed idea with this was to stop them from developing the nuclear weapons. Okay, that's fine. Now they're having that kind of conversation. I mean, this is an incredibly short sort of thing. We're talking sort of Friday it started. Now Monday night it's sort of wrapping up. They were attempting to sort of wrap it up a little bit. But now he's like, nah, look, nah, we're not going to negotiate with that. So it's a bit hard to sort of really sort of believe that anything that this guy's got to say, because it's sort of like, I get this whole sort of like, it's probably sort of like, oh, I've read Sun Tzu, and when your enemy's on their knees or something, that's when you go harder, or something like, these kind of things to this kind of effect. But the point is that the initial idea was to sort of stop or supposedly was to stop the um, nuclear weapons development. Now they're saying, hey, let's have a conversation about this, and they're like, nah, we don't want that now. Nah, we want regime change. And it's kind of like, well, going in a different direction. So as much as they're sort of saying, the market sort of reacted and said, oh, okay, great, well, this could be something good. It still seems like it's kind of a little bit far from over. So developments, and it's just going to be like this. These are always like this with these bits and pieces. A headline comes out, everything's okay, yeah, market reacts. Oh, no, wait, no, it's not. Boom, market goes back the other way. It's just yet another thing of 2025 theme of absolute ridiculous choppiness. Um, it provides some great trades, particularly if you can pick the levels. Like, I was sort of caught some Aussie shorts off which I'll get to on the charts in a moment, off a larger high time frame rising wedge. We got sort of DXY obviously sort of coming into those supports there, and gold played out very well with a nice little flag move down to hit sort of price targets overnight. So look, the trades are still definitely there and still able to trade, but in terms of actually sort of like finding something with a trend, if you're a position trader, like as in I buy here and I'm looking for it to sort of ride and do all this, well, good luck. I've tried that. I've actually got a second account where I've just been implementing more a swing trade, and it's been great profit, back to drawdown, great profit, back to drawdown, and it's not for me. I'm very much an in and out trader. I just look at the numbers of what I could have just produced just in the last week on that account. Had I just gone in and out, in and out, in and out, and percentage wise, you'd be like, "Whoa, okay, this is great." But of course, while you sit there and into profit, into drawdown, into profit, into drawdown, it's a higher stress thing, and obviously zero return. So, look, should these things break? Okay, maybe that's when you get your payday with these, which is what I'm trying to do, and that's what you've got to try and do with these with the trading. Like, what I mean. It's not my whole account into one thing. It's just a portion of it to try out some new sort of tactics against the market. Well, I mean, it's nothing new, but different to what I normally do anyway. All right. Anyway, so enough of that. Moving on today, big one. Well, the only sort of thing of note is the BOJ, and they're looking to hold their rates. So from the sort of wording that I've sort of heard from around the market and what I've read in that, it's that Ueda, I think is how you pronounce his name, is going to be sort of coming out, although they're holding a bit more of a dovish tone on it all. So, the thing is with the BOJ, they're always sort of like, yeah, they're going to raise, because obviously they're very incredibly low. Actually, on this chart here, you can sort of go down, you can see where they're at compared to everyone else. Actually, Swiss Bank's actually, oh, no, they're lower. But Swiss Bank also has their rate decision this week as well. But with the BOJ, they're always coming out saying, yeah, we're a bit hawkish and we're going to sort of do it. And then when push comes to shove, they just don't do it. They don't react. They lose confidence and it just sort of pulls back. So I think that'll be sort of interesting to sort of see, and I think that's what the market's waiting to see in regards to the yen. Although they're sort of holding at the moment, I think that if the wording comes out a little bit sort of more dovish, you could see a little bit of a weakening of the yen, and which is important at the moment because I think I sort of got, well, I think I pretty much got that one wrong. I think over the weekend, sort of saying that, look, yen may have been the sort of place to park it. But of course, if they're coming out with a bit more of a dovish tone, if people are going to be sort of starting to still sort of freak out on that. They're looking for the safe havens. If yen's not the option for the safe haven, you've got the Swiss bank. They're cutting or expected to cut later this week. What does it leave? It leaves US dollar and gold is holding up. I mean, it's at 3,400 currently in that, but it is still a little bit under pressure at the moment. Certainly, we saw that sort of sell down, which I'll get to on the charts in a moment. So, it really is sort of lining up that maybe US dollar, despite everything else, may be the default place for people to park their cash. We saw a strong reaction. We've got a little bit of a double bottom setting up. So I'll get to that in a moment. Anyway, rest of the news, we've got BOJ through there, nothing else through Asia. We've got the G7 meetings. Apparently, Trump is leaving this early. And sort of like, the headlines at the moment seem to be that he's heading back to the US and asking him to prepare the Situation Room. So obviously, I assume that's something to do with probably with this Iran situation or something like that. I don't know why he'd be leaving in the middle of the summit and then preparing the Situation Room. It sounds like a war sort of thing with it all, but we'll see. We'll see how that sort of plays out. That's something to pay attention to throughout the day. Rest of this, nothing really of note. We've got retail sales out US tonight at 10:30, and we're seeing numbers there. Again, a bit of a mix of this to the headline number and that obviously slowing down a little bit. Core moving up just a touch. So it'll be something to sort of pay attention to here. Stronger numbers here are going to be obviously a little bit better for the US. Obviously, being if it's a week with the numbers, well, they're going to have to help out a little bit more. This is the theory of it all, not that they're necessarily going to cut later down the week. But again, like I said, you plug it into that side of the equation. And if it's a weaker thing, they're going to have to help it. How do they help it? Well, they do it by cutting rates to stimulate companies to sort of hire more people, then more people are getting paid, the more people go out and sell, buy bits and pieces and that pushes up retail, pushes up GDP. That's the sort of the play out of that side of the data. Rest of this, nothing of note really. These GDT prices here, this is like a just separate thing because I don't really trade news, but this is, I'm pretty sure, the milk. Something to do with the milk numbers or something. Average price of dairy products sold at auction. Yeah, this is a very dark horse kind of one in that. I've noticed actually going back probably about a year or 2 years, probably 2 and a half, 3 years now, trading a little bit of everything in that. And this can actually impact New Zealand dollar a fair bit. It's a very unassuming sort of thing, but at least back then it did. So I'll follow up on that one tomorrow. All right, jump onto the chart. So we've got DXY, and this is what I'm talking about yesterday. We were coming down. So if we get on a lower time frame, this little period through here is where we had the excuse me, the what Empire State data, which came in very weak, and it sort of chopped for a second, actually smaller than this, and then obviously bang, dropped down here. But as you can see, it's come right into this sort of support area. So this is exactly where we sort of thought, look, this is where it's got to hard to put a post on X at the time and said, look, this is where they need to get a hustle on if they're going to do it. Had this little measured move that sort of completed down into this zone. And then obviously sort of markets going, yep, okay, let's give it a shot back up over here. As it sort of dribbled up, we actually have a small, if you get right down into it, we had a little bit of a channel break initially. So if you actually get down in here, I don't want to sort of chalk up these charts, or chalk up like, there was this little, listen below, make it smaller, white. We actually had this little channel forming through here, which actually worked out quite well as you can see. So, and this was an early indicator that we actually might be getting a little bit more of a push up and a move on over here. So, a couple of things actually happened. One that I didn't mention 2 seconds ago was the 20-year bond auction, and that actually had a fairly decent response. So we sort of saw the market sort of react and move back up over here. They were sort of like, okay, um, sorry, I'm having about eight words at once here. Came down into this lower area here around the time that you had the Empire State data, little bit of a spike up and then drop back down into. Now this is when there was their de-escalation headlines. So the de-escalation headlines and that were going, oh, okay, everything's all good, and they piled on and really drove it down. So there was a double hit down in here. You had the Empire State, so local data week, then you had de-escalation, came down over here, and then the market said, yeah, bang, push back up over here and came out of this little channel, consolidated a little bit here, but this little one through here at 3 o'clock this morning was the 20-year bond auction, and that actually had a fairly strong response. And I think that's important to sort of pay attention to because with that at the moment, like one of the big things is that the broader market has, seems to have lost a bit of faith in the US economy, of course, with all the tariffs and all the sort of back and forth and all this kind of stuff, and people saying, okay, look, they want to diversify, why would you want to have all your capital? I'm not talking about people like you or I kind of thing, traders like this. I'm talking about people who've got serious money that can move markets. Why would they want to have it in something that could potentially be so volatile in the sense that it can have a tweet change the sort of value of things by a percent over the course of a couple of hours. I've said this a few times, but that's why I don't trade oil because it could be perfectly fine, and then somebody bombs somebody while you're asleep, and you wake up and your position's gone. That's effectively what these tweets are because you're not working off the normal sort of economic calendar. Like that's fine. You've got an idea about what may be coming up. It may be wrong, may be right, may be wrong. It doesn't matter, but at least you're aware that it's happening and you've got an idea about what market expectations are, and then you can trade the reaction to the market of the market to these bits of data. But when it's somebody tweeting something in the middle of the night or somebody bombing somebody in the middle of the night, you got no hope. So anyway, point is, I think sort of the fact that they're sort of starting to see a little bit more of a sort of confidence in these bonds is very underwhelming. I'll just see if my headphones will hold up here. A very underwhelming sort of version of maybe. Let me just get this charge going. These headphones might die, so hopefully I don't lose it halfway through the analysis here. But yeah, the bond auction, I think, is sort of something worth paying attention to because obviously, if people are sort of starting to bid up the bonds a little bit more, um, it's showing that they've actually got a little bit more confidence back in the US, and that's been its biggest like sort of pitfall at the moment, the lack of confidence. And then we can see that the reaction that it had around this time was actually quite positive to this sort of like slightly stronger bond auction. So it's just yet another piece of the puzzle to sort of place in there. So in terms of what we're actually looking for on the chart and technical analysis now, well, I put this in here a little bit earlier because we do actually have a little bit of a double bottom setting up, potential double bottom setting up here. Now, with the double bottoms, it's always a little bit hard, tough. I've found a safety sort of thing with it is really just to look for the body fills. So use the bodies, ignore the wicks with it, and which would give you probably a little bit of a lower, well, obviously would definitely give you a lower sort of price target over here. So I'll leave this one just on here, just for the idea of it, see how this one plays out. But what I am actually looking for is probably this other one up over here. So around 99.20 comes in line with this previous sort of resistance that we can see up over here was a support way back there. And that lines up pretty well, I would say, with where we could be sort of targeting and where we could expect a reaction should the market move it up over here. And that's somewhere that we could be sort of targeting. So, it's got a little bit of work to do. The confirmation is going to be above sort of 98.48. So I'll put a little alert here. And, okay. Oops. Oh, well, whatever. So we've got double bottom, break higher, whatever. I'll know what it means as it comes up. So I would say sort of like if you can get above this 98.5, you could be looking up to 99.2 there for a completion of the double bottom measured move. So this is where I'll be sort of looking direction, bang, up over here. And as you can see, the reaction's been quite good, but look, as we know, it's got a lot of work to do. And I think these headlines are really going to be sending it back and forth, back and forth. So I think very much important to be paying attention to what's happening with this situation room and sort of Trump over just leaving the sort of the summit. But that's pretty much where I'll be looking at. You could expect a little bit of a reaction as it does come into this 98.5-ish kind of area, this horizontal. Obviously, this is where they tried to sell it down yesterday or previously. Was this on Friday? Yep. And if it does react here, you could just be looking to more of a sort of consolidation through this period, putting the focus back on 97.7. But should it break above here, that's the price target that I'll be sort of looking for. Move along, we've got Aussie. As I said, Aussie, which chart was I using for this? I'm having about 8 charts of this stuff. This is the one that I put up on X last night. So this is what I'm kind of looking and seeing it at the moment, which is really just, it's been so choppy through here. And if I go back to that other chart, we've got this kind of channel that has been working. And this is what I said, with this channel, it's kind of got 2 bands on it. It's got this, because it's so choppy and not clear. It's not a clear channel. But you could kind of say that there's a sort of top band here and a bottom band here. Bottom band, you buy it up. Top band, you sell it. And that's what we've seen happen here again. So if I just get back onto this other chart because it makes it a little bit cleaner, you can see that, up in this area here, it's also basically pretty much quite well setting up for a rising wedge. And of course, rising wedges are reversals. It's also coming into this horizontal that we had marked out here, which also happens to be the 61% drop from October. So if you go back and you get right into this, you can see here, right on 61% of that drop down there. So it had quite a big sort of confluence sort of setting up with it here. Let's get back onto the 4 hour, in that you've got the 61%, the horizontal, which we've got sort of marked up here. There's the buyers here, sellers here, just before they knocked it back down, and the top side of this wedge. So that's three sort of factors to sort of say in a confluence that this is sort of got to get rejected from here, and that's what we saw. So it doesn't mean that you're necessarily set to come down over here. The rising wedge, does. I mean, a rising wedge is reversal, and you sort of give it a measured move like this here, sort of connecting these two. Make this measured move, and the measured move off this would be obviously from wherever it breaks. So, say it dribbles down, say it does break here, dribbles down here. This sort of takes you back down around sort of 63.15. for a measured move of this larger wedge through here. Now, you've got a bunch of levels of sort of horizontal support. You've got, a whole bunch of things happening. But if we do see a continued push on US dollar, and I'm not even talking just that move that I showed before with the double bottom, that could get it back down to testing the bottom side here, the supports over here. Maybe this horizontal down at back at mid 64s again. Could definitely see it move back down there. But you need to then break that above that to be able to sort of see the market buying US dollar enough to really break this down. So, this isn't necessarily where we're looking as of right now. I mean, main focus is still holding above 65, but, as I said on the weekend, this is 6 weeks now, or this will be the seventh week, I think, in which it's unable to close above 65. So eventually the market's going to go, okay, enough of this kind of stuff, and they'll knock it back down. But, you know, I've been trying to play the short side through a lot of this with mixed results. But yeah, very much, as I said, a very annoying, frustrating kind of time to be sort of trying to trade these things like that. But at the moment, it is seeming to be pushing back down over here a little bit. You would have sort of thought with this whole sort of risk on, like yesterday, it sort of made a low and just ripped the whole day. If you get onto a lower time frame, it actually broke a channel quite well, though. As you can see, it was just sort of grinding up here. So like this. And that worked out almost perfect for a channel break with a lower high and then bang, moving back down over here. So I guess, in a lower time frame, you could say maybe it's going to be doing something to this effect. And we could see this thing sort of just drift along here. But yeah, sort of at the moment, it's, look, it is up near its highs, but you do have quite a lot of resistance up here. If it gets above 65, 60, I think you're going to see things take off a little bit. But for that, you're going to have to see US dollar fail and break through its supports, which it obviously bounced off yesterday. So we'll have to see how that one sort of plays out. But in the short term, I'm probably sort of looking for this move to sort of probably sort of continue back down. Bit of support around this this side over here. So this is probably where I'd be looking to sort of see what would be happening with the test down here. This is where it sort of flew off yesterday. Coming back down here, if it does, be like, that's the course of action. So I'd expect a reaction again from this level here. As you can see, the buyers have been sort of pretty keen to hold it here. Whoops, a number of times. But if you can get a smaller bounce, you should be able to get this down. So this move here was when was Friday when the war sort of was announced, when Israel first attacked. And as you can see, drop down, bang, beautiful. It's completely undone that move. And this is the frustrating thing because I was short from this area over here. And, you get down in this, normally I'd bank here. But I'm like, no, look, it's all this thing's going to kick on. It's going to keep going on. And it's all the way back up here. So that was a big failed effort sort of through this period here, which is quite frustrating. Particularly when you sort of see this thing and it tries to push down, gets a bit higher, tries to push down, and then it just grinded all day yesterday. It's very, very frustrating. Anyway, so yeah, we'll see how we go this here. Look, if it does break out this little channel here, you are sort of coming back into a previous zone around that sort of 65 round number, that kind of thing. You could be looking for a bit more of a range up in this sort of 65s, but again, paying attention to what happens with all their sort of headlines, I think will sort of be what sort of could potentially push it one way or the other through the session. Gold, as I said, coming down is a little bit under pressure here. There was it was a very good trade through yesterday, actually. So where's the other chart that I was using? It's this one here. So from a technical standpoint, this is just perfect yesterday. So if we have a look on the 1 hour, you can see a nice sort of negative divergence that's sort of set up, coming up into these highs over here. So we had a little bit of a gap up on the ID, World War III, yada, yada, yada. Nice little wedge, broke the wedge, came down, and it just hung at these lows here yesterday. So this was a great sort of trade through this last sort of period here as well, where, we've come down here, it just could not rally. It did this, I mean, this is on the 1 hour, so this is about 6 or 7 hours or so, and that just completed perfectly down into that sort of, 33.85s and that. I put a post on X at the time. So you can see that's obviously setting up a little bit of support here. This is actually previous levels as well. We kind of sort of saw it back a couple of weeks ago or whatever. That was the breakout move of that larger falling resistance. So you break out here, back test, and then that was your confirmation, higher high, bang, moved up, and then obviously, the war kind of thing hasn't really kicked off, so people have peeled back their positions there. So the idea being that this last little move through here is probably all tensions, everything's about to blow, okay, bang, people sort of hedge their positions. They think, look, if they drop bombs and they go nuclear over the weekend, we're going to see this thing really rip. That didn't happen. So what do? They go, okay, well, I got a bunch of gold based on the idea it didn't. They didn't. Okay, let's get rid of that. And they peel it back, and they peel it back, and they peel it back. So what we're looking at now is a little bit of a support setup around here, which we can see. Oops. We can see is obviously this little horizontal here as well, where the buyers have been. So I think sort of like this is the area you need to get down underneath for gold. Moving down here, and then we can sort of look for a little bit lower. But yeah, I think till you get down underneath 33.80s, look, to be safe, I'd probably say 33.76 or so. Moving down underneath there, probably sort of drag a couple of these across again, and we can start to see where the market has reacted a number of times. And this is the point. This is why I keep a lot of my charts, and they get quite scrappy because the levels will show up time and time again. So moving down underneath this, 33.46, that's probably where we'd probably be looking, I would say, underneath 33.80s, 33.78, that kind of thing, move down towards 33.40s. And I'd expect a little bit of a reaction from buyers there as well should we get down there. It's not counted out that it won't just dribble back up. Again, these headlines will push these things one way or another. Silver, try to keep going so my headphones don't die. I've got to charge them. Um, Not really doing anything. Yeah, I've really lost a lot of interest in silver. I caught some great. I caught this move down here, like way back. Was this April or whatever, where we had that big sell down here. I tried to sort of short it a bunch of times through here. Got sick of it through this period. Had a couple of shorts here. Got sick of it. Got stopped out, and I haven't done anything at all up through these areas over here. So if we zoom out, can we see anything? Look, in all fairness, this is something that I was kind of looking. So this was the top side of this wedge, which gave that great trade down and wiped out the whole year for silver. It's played its part up here as well. So I think sort of certainly this is the line to be paying attention to, which I've got the alert on this one, as you can see. Because if this thing, I would say this is due for a test. So I would say, despite it sort of consolidating up near the top here, I would expect a bit of a move down. But, you're either going to see this, whoops, or potential for that. And you know what I mean? It's hard because okay, it's at the highs. It's it's a decade long high, 13-year high or something. But that is a wedge, and should that wedge break, I think it's going to have broader implications than just a little bit more of a dribble. But we will see. We'll see how these things sort of play out. But as I said, till we sort of get back down to this area over here, this sort of excuse me, test around maybe 35. I think that is probably, it's definitely going to have a reaction. So if you want to buy it, I'd buy it from here, just with the idea that maybe it sort of keeps up, moving up over here. But even if it does, I would say that this is good enough for me to sort of say that you're coming to a pretty close sort of top up over here because we've got a couple of horizontals, obviously, sort of from previous years, like sort of going back 13 years or something. I would say it's probably limited with its time. I still reckon there's going to be chances to buy this thing back down around the 30s, maybe 31, 32 kind of thing. But that's kind of an area that I'd probably be more interested in. I just think it's a little bit too overdone here. Move along, we've got copper. Copper's, yeah, again, not really doing much, just dancing around here. I did sort of think after this sort of gap close that we may come down a little bit lower around this sort of obviously 47-ish area where I had it sort of marked out. It seems to be holding up for now, but again, it's kind of one of those ones I've lost a little bit of interest while the price action's like this. It's just super, super choppy. Can we fit anything? Yeah, that's not too bad. It's thickening it up a little bit. Make it stand out a bit more. Boom. Yeah, look, I think that's something that'd be interesting. Again, this is the level that I'm sort of interested in at 470, or 4689, whatever. This kind of area down here. But, as you can see, the market has been respecting this quite well. This is one, two, three, kind of four touches here. Should it break this line, I think that could be opening it up. First target would be down here. If you break down underneath here, I think that could be sort of seeing a bigger move back down to test these lows over at 4.5. So that's where I'd kind of be targeting. But I think that's probably the best. If anything, I think that's the safer trade down through there. But there are your two moves. Potentially, if you break that down to this zone here, if you break that, then back down to 4.5. I just don't see it necessarily being anything super at the moment. Yeah, happy to trade with that one, but I think, definitely pressure's on for the downside there. And finally, we got China, while still got some battery left, doing what it does, which is just grind. So the one or yuan always hits these levels of just grind along, grind along, grind along. It's attempted to break out. That obviously didn't work. Market lost interest. Bang, smack back down here yesterday. So, well, not yesterday, the last couple of days, but it has found itself a little zone down here, which we could probably trade for a little bit of a breakout. Let's put it like this. And I would say this is going to give us our direction. I'm still looking for the top side here, which is going to weigh on Aussie, but when it does hit these areas, it really does just go into a bit of a snooze. As you can see, this is just super tight. It's not really doing anything. Tried to break out, didn't happen. Okay, fine, bang, and then just sideways. So I think that's really your kind of breakout this way or this way. But I am still looking for a top side move and potentially a break up over here, which you can see how long I've been looking and waiting for these kind of moves over here, which, it looks like it's going to go and then bang, nothing, nothing, nothing. So I think till you get a sort of breakout of this little box here, it's just destined to just grind along sideways again. All right, so I think that's pretty much it. We got gold silver ratio just as a little one here. Look, this sort of did bounce as I sort of thought yesterday, but as you can see, in line with sort of gold coming under a little bit of a pressure yesterday, and this actually affected gold a lot more than it did silver. So obviously, this is your big breakout move with silver. This is where gold was sort of taking back the lead coming into the weekend. Gold has sold off here. Silver hasn't done anything. This to me is something to pay attention to, because if silver's going to be breaking higher, it should be moving off this move down here, because gold silver ratio, so down will be sort of more focused on silver, but it didn't. So as you saw, silver was just really just still sideways. So I think that's worth noting for silver, and I wouldn't be buying silver. I said, well, I'm not buying silver. Also, if anybody could do whatever the hell they want. But I think that's interesting that, this is the top side of that sort of big channel that we had going way back. It sort of played its part. It's bounced. Again, bit choppy. It's when you get these big sweeping moves, you can't really use technical analysis so much on it. Above 95 continuation, you're looking at the top side of the channel. That's about it. Bottom side, break lower here. You're looking back down to another test of these supports for what it's worth. All right, so did Aussie gold, silver, and boom, that's it from me.